Our next guest is John Wang, head of crypto at Kalshi, the largest prediction market in the United States. John sits at an interesting intersection between traditional finance, prediction markets, which some argue may be the future of markets, and crypto. Today, we're talking about what's next for investors and traders alike, and how people can use the new age of information to gain a competitive edge. Welcome to the show, John. Good to see you.
Thank you very much for having me, David. Good to see you too.
Many of my guests, economists and analysts alike, have been using prediction markets for exactly their own predictions, prognosis, and trading tools. Several economists I've talked to use Kalshi as an example for what they believe is going to happen with an election or a certain economic outcome. The closer prediction markets have gotten to the actual date of the event, the more accurate these predictions tend to become. So this becomes a very valuable and interesting tool for investors who now, instead of asking themselves, gee, who's going to win the next election in the United States or even in France, or who's going to win, what the Fed's going to do next, or what the jobs numbers are going to be like, they just go online and look at what prediction markets are telling them, because in almost every single case that I can observe, and of course there's outliers, the prediction markets are correct. How has this fundamentally changed investing, John?
You're absolutely correct. Prediction markets, they're kind of this new primitive that have arrived into the finance scene. Previously, there's all this gray area and unknowns of the risks out there in the world that are kind of like your stocks or bonds or Forex. They're embedding all these different data points into this like single price. But they're kind of like an indirect proxy of a lot of the risks that are out there in this world. So, whether it be on like a political election or on the price of a specific like asset or the odds of a certain legislation passing, like these sorts of invisible risks are now quantifiable with prediction markets. And so I think it's a very useful tool for investors to look at, to price in sort of like the expectations of certain things, really anything, and potentially even hedge their risk to sort of balance out that portfolio as well.
Yeah, I think most people watching my show know what a prediction market is and how it works. So you place a trade in a certain event, let's say the S&P 500. Where's the S&P 500 going to go? So instead of actually buying futures on the S&P 500, you'll go to Kalshi, you'll go to the finance page, S&P closed by end of 2026, and you can place an actual trade on a particular outcome. Now, where this becomes a challenge for me, John, at least, is where I see potential rigging in the game. How does Kalshi protect investors and traders against rigging? What I mean by that is, let's say a trade is, what is a particular what is a particular politician going to do with the legislation? Or what is somebody going to say at Super Bowl halftime? I've seen that before. And then you have really large whales placing trades or bets on any one particular outcome, and that may move actually public opinion to trade on that in the real markets. How do we prevent that from happening?
Yeah, obviously insider trading is it's a problem across all markets. There's always asymmetric information. In prediction markets, though, the sort of events that people are trading are more specific. And so there are like new challenges and also new solutions that we need to do to protect against that. We do a lot of different things. For example, we have like a public rule list for every single market that describes all these situations in which a market would resolve, all the different criterion or sources that we would look at. And then we specifically ban and prevent insiders that are, for example, if you're a politician running for election, you cannot trade on a market. If you're a congressman, you cannot trade like politics markets on Kalshi at all. Even in sports, for example, we collaborate with sort of like different partners such as IC360 that have lists, very long lists of people who work in the sporting industry,
Yeah.
in specific sporting leagues, even coaches, lists of athletes, people within the organization that we kind of blacklist from trading these types of things. We also have a market surveillance team behind myself actually, um, that includes members of the FBI that actually worked on looking at and surveilling our markets 24/7 to sort of spot any like miscellaneous activity. If you see someone opening an account and making a bunch of trades that are quite successful and correlated, and can raise some flags, that means that our team will take a look at it. And so it's by no means like any market is it possible to prevent like fully prevent insider trading 100%, but we definitely take a very strong approach, even for example, like KYC, to ensuring that our markets have integrity.
John, what is the economic principle behind why prediction markets have been so accurate, especially the closer they get to the event? I'll take political outcomes as an example. Elections. In almost every case that I can think of, major elections have been perfectly predicted by prediction markets. This isn't an opinion, it's just a fact. And it's a scary fact for a lot of people because up until recently, people have relied on polls, analysts' opinions. Polls are usually wrong. But prediction markets have gotten most of the last major elections around the world correct. How is that possible?
100%. I think, really it's like two realms of thinking. One is like with polls, it's almost a centralized form of deciding what the truth is. You kind of have like essentially one polling center or like one source of truth for deciding the odds of something. And they might be restricted to a few thousand sample set of data points. Whereas like prediction markets, I feel like it's taking more of like a capitalism approach to things. After all, they were invented by this economist Hayek back in the day. Basically taking like a markets-based approach to truth, where you take all these thousands of data points across the world from thousands of traders looking at tens of thousands of different data sources. They can form opinions, and then like through sort of buying and selling and kind of almost, I guess, like evolutionary, like Darwinian, colliding of opinions and beliefs and capital, you erode it towards like one singular truth point. So markets are really quite efficient at pricing these types of things in. And if you're like a very winning trader, over time you are rewarded for being able to calibrate for the truth better and being able to ingest data better. And so really, we kind of as a platform have better and better data over time.
Okay, so let's take something closer to home, crypto. Bitcoin price at the end of 2026, that's a trade. Now, if I were trading Bitcoin and buying Bitcoin, well, I'm holding some Bitcoin, I don't trade it, but if I were trading it, first thing I would do is look at the odds here. Because going back to what we're saying, if prediction markets have been accurate historically, then I'm going to look at these odds and it'll tell me exactly whether or not to buy, hold, or sell. The first thing I've noticed is that nobody here knows what's going to happen, right? There isn't one particular trade with one particular outcome rather that has an odd or unusually large percentage of confidence. It's a pretty even normal distribution, I would say. For some reason, 150,000 or above is 3.9%, and the one right next to it, 140 to 149,000 is only 0.6. Anyway, most people, I think, at the highest concentration of trades here believe 70 to 80,000 by year end, which is a pretty conservative estimate considering that Bitcoin is currently trading below 70,000 already. First of all, how would you interpret this information? If I were just to pull up this dashboard and show the odds here, how you're interpreting trader sentiment right now based on prediction odds?
Yeah, so funny you pointed out the extremities. I think that actually does make sense, the odds there, because if you look at the other buckets, they're kind of like buckets of $5,000, whereas 150,000 or above is kind of
Oh,
an
yes.
infinite bucket above
I see.
150,000.
Okay.
And same for the lowest. But you're exactly right. Prediction markets, they're not just like an indication of where things are going. They're also an indication of like the confidence people have. So that like in itself is also kind of an indication of like it's a valuable data point. It's like people are uncertain. And that's like also useful information. Here it's Bitcoin price at the end of the year. That's kind of is 6 months away. Anything could happen in between that time. What you get here is like a very interesting and discrete probability distribution of where people expect the price to be by the end of the year. And this is not like a fortune bowl. It's not going to tell you exactly what like where it's going to end up. It's by all means just a predictive measure, but it does show you where people think it'll end up, and you can actually use that very useful information about expectations to inform you about where people think the market is going, and therefore, are we being too? Is the crowd being too bullish right now? Is the crowd being too bearish right now? And you can kind of calibrate whether you think we're very like undersold or oversold at the moment.
If
I think
you
that's
were to
actually a useful
take
piece of information too.
That's exactly my next question. If you were to take data based on what you see at Kalshi for the crypto trades, what would you say is the current trading sentiment right now? Are people fearful, greedy, or neutral?
Yeah, I mean, I think it really varies on a week by week basis, depending on new developments, because regulatory, for example, developments or market developments affect things. I'm not the right person to make a call on bullish, bearish, neutral, but personally, I'm optimistic about where the market is going and where you know the underlying sort of fundamentals are going.
I understand that people can make predictions on political outcomes or what the Fed is going to do exactly. Events that don't have a direct market you can trade on, that makes sense. But why would anyone trade on where Bitcoin price is going to at the end of the year on a prediction market? Why not just buy Bitcoin or sell Bitcoin?
That's an excellent question, David. So you're buying Bitcoin itself. It's you have to like you can only profit if Bitcoin goes up in that case, right? Whereas with crypto prediction markets, you can actually profit if the price goes down. For example, you can trade that the price will go to a certain lower price by the end of the year, or you can, every single event is like a binary yes or no. Yes, well, this will happen. No, this won't happen. So you can actually take the no side of sort of like a price point being hit as well. That's essentially allowing you to profit on a falling market as well. So that's like one very large piece of why trading prediction market, and you're able to profit on both rising and falling markets. The upside is potentially higher as well, because if you, for example, buy Bitcoin right now, it's like 60K. If it goes to 100K, you'd make like a 30 so like a 40 to 50% return or more. And then if you were to actually project the price to hit 100K on a Kalshi crypto prediction market, for example, like, well, let's say theoretically the odds are like 5%. So if you buy in at 5%, if it hits 100K, then the odds of it hitting 100K are 100%. So you would have actually 20x'd your money instead of only making like a 40 to 50% return. So the potential upside is higher, as well as the potential downside, since you're making a specific call in an event happening. And I think finally it's like very intuitive. So people just like to think of where the price of Bitcoin is going up or down by when, and prediction markets give you those guardrails of when this is going to end, all the strike prices that you can buy in at, and you can kind of see the odds as well. So you aren't flying in blind, which you might normally be when you're buying or selling stock Bitcoin. You don't know how much to buy, how much to sell, when to buy, when to sell. You don't really have a specific time in which you're going to do it. You're kind of just holding on until you think you might sell. So these are all kind of reasons.
The critics say that prediction markets, I'm not singling out Kalshi, but all prediction markets are just another casino. That's their criticism. You're just gambling on certain events. What's different from going to Vegas? How would you respond to that?
Yeah, there's a lot of differences. Firstly, the types of contracts that we offer are like very diverse. Many things that you wouldn't be able to do like elsewhere. Things that actually have like economic impact on the world. But also the underlying like mechanism is very different. So when you're going to like a casino, you are like essentially betting against a house. So it's one counterparty. Whereas in a prediction market, it's much more like an exchange, like the New York Stock Exchange, or like a brokerage platform, where you are actually trading against another market participant peer to peer, and that has like meaningful impact on the pricing, the cost that we can give, on the fairness of the markets, and also on really just like being able to offer something continuously 24/7, instead of having to like ban specific winners, which casinos and sports books do a lot.
I want to talk about perps just a minute, but going back to the information age, do you think prediction markets can eventually replace large portions of journalism, economic forecasting, or either other AI predicting tools? Because why rely on humans to make predictions when you can just look at a market aggregate and what the market thinks is going to happen, which has so far been correct?
I think they are very complementary. So, the prediction markets also do rely on journalism, reporting, information being released into the world for people to, make opinions or judgments off of. So, journalism and information is very synergistic to prediction markets, and the other way around. We also have prediction markets used by the largest media organizations. Kalshi actually has exclusive partnerships with Fox, CNBC, CNN, who all utilize Kalshi on a daily basis during like live news programming, referencing Kalshi odds for whether it be the weather, elections, and also we are integrated in the Bloomberg terminal,
Yeah.
which is another source of economic and business forecasting.
So how is a trade made? Can we just establish that? I'm just pulling one up at random. This one seems to be quite popular. How many launches will SpaceX have in June? Who creates this particular event? How are the contracts made? And how is it enforced?
Yeah, we have a whole markets team that works on this in the back end. So a team that really monitors every single type of event that's happening on in the world. They create like a contract that gets filed with our regulator, and then they can spin up this market with a simple question and also all the types of criterion that this event would resolve on. And we have people monitoring this stuff 24/7. They're up late at night. They're also we also have a lot of automations going on to like help make it smoother. And a lot of our users suggest markets that we list, who we also listen to.
Yeah, and several of your predictions rely on third-party sources for information. Outcome verified from Federal Aviation Administration and SpaceX, for example. I guess if that source of information is inaccurate, or let's say unreliable, it's not, maybe you don't have information on by a certain time. How is that conflict or issue resolved?
Yeah, I think there are maybe even more. I'm not sure about this specific market, but usually there are quite a few different selection criterion. So if the top one falls through, we go to the backup one. If the backup one falls through, we go to the backup B one, etc. But then we do also have like rules in there where it's like if no sort of like thing can be reached, we usually like I think there's usually like context specific events that happen. I'm not like too deeply involved in the market resolution aspect of, for example, the SpaceX launch market, so I'm not allowed to say for that. But for example, for our crypto markets, which I am a bit more versed on, because that's what I'm working on here. Those for we have pretty much no like downtime in our price feed, so usually certainly not very difficult to resolve. And we do have like other price sources that we can resolve as a backup for.
Let's talk about what I'm looking at on the screen right now, which is BTC perps. And for somebody who doesn't understand, well, explain to somebody who's never used this before, what is a perp? What is a BTC perp in particular? And the contract information, max leverage, 6x, contract size, index, trading hours. What is this? What are we looking at? How does it work?
Yeah. So perpetuals are really this like, I think the biggest instrument, like trading instrument in crypto actually. And they do $90 trillion of volume. But actually as of essentially like 2 weeks ago, they were never available in the United States. Kalshi is the first regulated perpetuals exchange in the US, being able to offer it to US users and US institutions. And the reason why people find this so useful, this instrument, is it's essentially like trading, like buying Bitcoin normally, but instead of buying Bitcoin directly, you're trading this, the price of it, whether it go up or go down. And there's no expiry, so you can hold that position for as long as you'd like. So compared to like options or futures or even prediction markets, for example, you can actually hold this, and it tracks the price of Bitcoin itself. So you can make money going long, which is like, if you expect the price to go up, you can make money going short if you expect the price to go down. And it's also very capital efficient. So that means that like you can control a very large position at a fraction of the cost. You can choose the leverage amount that you'd like between 1 to 6x leverage. So all those things kind of make it the basically easiest way for you to express a view on whether the price of an asset will go up or down.
Okay. How is leverage obtained? So here it says max leverage 6x. How does that work?
Yeah, so leverage is essentially a way for users who want to get more out of their capital to size up on their positions. So if, for example, you're using 3x leverage, $100 of capital that you put in controls $300 worth of exposure to a position. And so if the price of Bitcoin goes up 1%, then the gains that you would experience would be 3%. Or if the price of Bitcoin goes down by 1%, the losses you'd experience would be also 3%. And so we have a bunch of different guardrails in place so that users can take control over their experience, given that it is kind of amplifying your gains and your losses. So we have stop losses, like limit orders, take profit orders, which essentially allow you to like cap the downside or also take profits on the upside. So you can really control like the lane that you're operating in. But yeah, leverage is like definitely a powerful tool for people that use it wisely.
How is that different from, let's say, if I get a margin account and trade crypto and Bitcoin in this particular case on margin? In principle, are they the same concepts?
Yeah, they're similar concepts. I think with perpetuals, I would say like the underlying is because with margin you're kind of posting up a position like for margin as well, but oftentimes like the margin is being loaned out by like a central counterparty, for example, and usually those rates are like much higher. Like I've seen offerings that are like 10x more expensive from like a cost perspective in order to take out the margin Whereas with perpetuals, you would think of it kind of like as like a market based margin. So really like um, anyone else can kind of like help on that trade, and we have like a risk engine. So it's a lot more cheaper to pay for those kind of like a leverage costs. That's like the main offering.
Okay, I want to ask you for the future of crypto. I know that's a very loaded question, but I asked this because not only is Bitcoin down, the entire crypto market seems to be going through a winter right now. People have been waiting for altcoin spring. I don't know if it came yet. I'll let you answer that. And with AI being the hot dominant trade on the planet right now, it seems that a lot of ex-crypto investors have now moved to the AI ecosystem. What's your response? And do you think crypto has a future? I mean, it's not just me saying this. Even Cardano's founder, just as an example, Charles Hoskinson went on media and said Cardano is dead, which is a remarkable statement from Hoskinson. So I'll get your sentiment, and what do you think the future is going to be?
Yeah, I mean, we're definitely in a bear market at the moment. But when people think we're in a bear market, that's also oftentimes the right time to start doubling down on building, on investing, on just learning more about the space. And I think the fundamentals are there. Like we've never been in a more like pro crypto administration, or had as much institutional development and adoption of crypto before. And I think, especially with like stablecoins, AI, it's clear that the rails of the future for the internet are going to be these programmable, deterministic blockchain rails. So I think there's definitely still strong use cases for crypto. There are definitely also macro factors that are affecting the liquidity of the whole industry. Given, I think, in general, AI has been a huge liquidity suck because it's just been so transformative for other industries. But I'm mostly focused on building great tools for investors to be able to price their risks well and also express their views in the most simple, effective way possible. And so no matter if the markets go up or go down, there's an opportunity on Kalshi for every trader.
Do you think there's any blockchain utility that can be replaced by AI and made obsolete?
I don't know if they're like super like, I guess, cannibalistic to each other. I think
Right.
they're kind of in different lanes. So I never thought of it like that before. I think it can be quite synergistic. Yeah.
How do you see, final question, what is the future of Kalshi, you think? How is Kalshi going to adapt to a new market? I mean, Kalshi and other prediction markets have basically rewritten the rules of how traders can interpret and gather information through prediction markets. But I wonder how AI may change all of this in the next 5 years. How do you think Kalshi will adapt?
Yeah. Well, I think our goal ultimately has been to build the next generation exchange, one that's built for the modern world on modern rails, and bringing sort of like interesting new primitives to the financial world as well. First it was prediction markets, then now with our second product line, perpetual futures, it makes it easier for anyone to kind of trade a derivative. And so we're going to keep going in this direction of building out our arsenal of like very powerful and sort of like net positive financial tools for all our users, and kind of embrace. We've also been embracing AI a lot, like internally at the company. I think we had a press release the other day about this, a bot that we have called Harrison that helps with a lot of the internal operations, including, for example, the market listings and verifications. So that's something that also helps us just run more efficiently as a company ourselves.
Okay, very good. Thank you very much, John. Tell us where we can follow you and your work and stay up to date.
Yeah, sometimes I post on X. Have a Twitter account, John Wang, J0HN Wang, and Kalshi. Also, we definitely spend a lot of time doing our announcements there.
What is, in your opinion, the most fun prediction market you've ever seen on Kalshi? Something like so quirky and unique that it's like, wow, okay, never thought of that.
I wouldn't say this one's a fun one, but this one was like super interesting for me, which is not sure if you guys saw the Citrini AI doomsday scenario. It's essentially a very viral blog post made by this research firm called Citrini. They essentially projected what it would look like, I think, in 2030, if AI were to kind of take over the workforce.
You talking about this one?
Yes.
Well, the Citrini scenario,
just like which stocks would crash, how like unemployment would rise, or the labor force and inflation. And so we packaged all of his predictions about the future, which you can see in the market rules.
If the unemployment rate exceeds 10%, S&P declines more than 30%, Zillow, oh, wow, okay, yeah, I've seen this before.
Even house prices. So if you look at the odds of the Citrini scenario has actually also fluctuated over time. It started around 10%. Now it's like stayed steady around 30%. So it shows like people have been growing in their confidence that Citrini's scenario will actually happen. And obviously this is like a very strong like disaster scenario. We also built a website around this called CitriniOdds.com, I believe.
CitriniOdds.com. Interesting. What's your personal opinion? Let me step away from the odds for now. Well, 28% is not low. It's not super high either. It's more on the not going to happen range, but it's not like zero, right? So, I mean, what do you agree with this, or do you think your personal sentiment should be higher or lower?
Honestly, I think 30% is probably around right. I would personally put it at lower than 30%. I'm oftentimes a part of the nothing ever happens gang, which is kind of, everyone fears a doomsday scenario. Sure. I think like society is very reflexive. Humans are very adaptive. Things usually adapt to changes. And so, I do think society will find new jobs. Home prices will balance out in some way, or like society will adapt.
Okay. Very cool. Thank you very much, John. Appreciate your time and appreciate your insights. Thank you for coming on the show.
Thank you very much, David.
Thank you for watching. Don't forget to like and subscribe.